right, what's going on, everyone? Welcome to Decred in Depth. I'm your host, Angelo, and we have an extremely special guest today, Mr. Chris Burniske from Placeholder VC. Chris, how you doing?
I'm doing well. How are you, Angelo?
I'm doing great. So we'll skip the background. I think it's a great time for Chris to come on the show. There's a lot going on globally. There's a lot going on with DCR, and I know he has some things that he'd like to discuss. So to start the show, we'll go straight into macro with current events and just a special time in the world and a special time for crypto and just the planet in general. So, Chris, it'd be great to hear your global thesis and thoughts on current events and how do you see it affecting the cryptocurrency space?
Sure. So globally, I think our behaviors will be forever changed coming out of this in certain ways. And people are going to be fearful enough for the quarters and potentially years ahead that I don't expect a V-shaped recovery that some are calling for. Central banks and governments are taking decisive action, which I think could help us avoid a true depression. But long-term, those actions should play to Bitcoin and other scarce supply crypto assets' favor. Clearly, Decred being one of those. But, the short-term reaction is typically the opposite of the long-term impact. And so with crypto as the riskiest asset class in the world, we can expect the asset class to go through turbulence here, even if its underlying thesis and underlying fundamentals are improving. Kathy Wood actually helped teach me this, that in times of crisis, the fundamentals of the most innovative technologies improve as people adopt those technologies to solve the problems they're facing or to cut costs over time. But again, those assets can get punished in the short term. So it's a bit of a paradox. And we have lots of people right now saying, look, Bitcoin, Decred, other crypto assets are not holding their value or not appreciating in a way we would expect them to as disaster hedges. But that's really mixing up the short to medium term reaction versus the long-term impact. And so, I've said before that as we exit this rocky period in global macro, I expect, and liquidity comes back into the marketplace, people develop an appetite for risk again. I expect crypto assets to be some of the fastest recovering assets in the world.
Chris, with BTC behaving like a risk-on asset in this current environment, if it does not perform well, like most of the crypto believers expect, what do you think happens?
So I think Bitcoin performing well can be viewed through a few perspectives. Everyone is fixated on price at the moment, but if you look at network fundamentals, Bitcoin's doing just fine. Monthly active addresses are pretty steady. They're north of 600,000. Daily transaction volume also pretty steady, around $1 billion transacted on-chain daily. Hash rate is off. We've had some of our largest difficulty adjustments, but that actually reduces sell pressure on Bitcoin as the least efficient miners go offline. And these are the key components of Bitcoin, right? These are the things that keep Bitcoin running. And I have firm belief that Bitcoin will continue running regardless of what the market does. Now, could we, go into the 5,000s or 4,000s or even retest the late 18, early 19 lows in the 3,000s? Anything is possible in this market context. I think, the 3,000s are now somewhat unlikely given Black Thursday. Crypto as a whole deleveraged by about 60%. So a lot of the leverage is out of the system, which caused some of the selling cascades that we had on that Black Thursday. That said, I understand people are frustrated that BTC isn't already skyrocketing. We get this question a lot from our investors. If it's a disaster hedge, why isn't it outperforming right now? But I think what people need to realize is Bitcoin is an adolescent risk-off asset. So it's still in its youth. It is still therefore risky and often trades with the other buckets of risky assets. And then, longer term, I expect it to be reflexive in immediate situations and reflective over very long situations. And so what I mean by that is, when there are global liquidity crunches or people sell everything, even if this is 20 years in the future, I would still expect Bitcoin to take a hit in that period, similar to how gold sold off, again, around that Black Thursday of March 12th that I was referencing. And so that's the reflexivity in short-term reactions. But then what I mean by reflective in the long term is, if central banks inflate money supplies, then Bitcoin's kind of like a sponge that absorbs that supply and reaches a new equilibrium, a new price level to be reflective of other actions. And so I think that, we could see more weak hands getting shaken out. We could see a delay in more institutions getting on board. This is not an easy time for Bitcoin, but I do have all the faith in the world that Bitcoin's fundamentals and value proposition to the world strengthens through this crisis.
Understood. BTC was born during a recession and during a financial crunch. If this continues, some experts are calling for a depression. How do you see it faring against other assets if this does drag out for a long time?
Well, this is where, Bitcoin could be used as a source of cash. It's a pretty liquid asset. It sits passively on a lot of people's balance sheets. And if people are running out of assets to liquidate, then if they have no other choice, I could see them liquidating their Bitcoin. I'm a little less worried about people selling their BTC because we've had so many shakeouts since the peak in 2017. And like I said, 2/3 of the leverage is out of the system after Black Thursday. But my question is, where is new money coming from? Because, we interface with a lot of institutional investors, and when we're in a risk-off environment, institutional investors don't want to take on what they perceive to be the riskiest asset class in the world. And so this is where, Bitcoin may grind sideways or slowly grind higher. I think, the halving is definitely going to become a conversation here. And that takes us really into minor economics and what happens there. So I'll pause if we want to dive into any of those components more.
Yeah, you know what? That does lead into my next question. So what are the anxiety reducing qualities investors look for when investing in crypto assets? I think that lines up with what you were just explaining. So maybe you can go more into detail on that.
All of our investments are based on a thesis for why an asset belongs in this world and why it will continue to provide more and more utility in the future. And so investments start there. And then really as part of our diligence and ongoing work, we focus on crypto economics, governance, and market infrastructure. And if those three things are good, I would argue that's very anxiety reducing. The crypto economics are the base incentives that allow the supply side and demand side to coordinate around this protocol of exchange, exchanging any abstract service that can be constructed, but those are the incentives that allow for it. Governance is, really around how these software fabrics change over time. Change is the only constant. You have to be able to change, and having a legitimate governance process, I think, is key for any social system. Another way to look at it is decisions are always going to have to be made, but the most important decision is about how decisions will be made. And so, that's a big thing we look at. And then specific to crypto is market infrastructure. So, these are the wallets, the custodians, the exchanges, the decentralized infrastructure, the DEXs, because these are all the points at which a consumer or user can access these assets. And if there's not enough wallets supporting the asset, then people just have a hard time custodying it or getting access to it. On the exchange side, if there's not enough liquidity, people have a hard time entering or exiting the asset. So market infrastructure is key to crypto in a way that it doesn't really show up, say, in traditional equities, because that market infrastructure is so robust.
What was it that influenced Placeholder to open up a position in DCR?
So I got interested in Decred early. Charlie Lee first tweeted about it as one of 5 assets I think that he was paying attention to. This was in 2016, and Willy Woo also put it on my radar, and so I got interested in it early, but was just kind of in the periphery. And then once we launched Placeholder in late 17, early 18, with governance as a large part of our practice, Decred was a clear standout. I think still to this day, it has one of the most elegant and fairly governed supply sides in the industry, where the hardware contribution is getting compensated, the software contribution is getting compensated through the network treasury, and then the governors are getting compensated. And so all necessary actors are getting compensated and have a mechanism for discourse and a mechanism for dispute resolution. One way you can think about the longer term picture of what's going on with the store value wars is it's really a game of attrition. And if there's too much forking, or if there's too much contention, then a community continues to splinter. But what you actually need is cohesion. You need the ability to reconcile your differences and stay together to provide a stable store of value that society can rely on. Now, I think it's also important people know that Decred is part of Placeholder's store of value bucket. And so we have Bitcoin, Decred, and Zcash in that bucket. And really our thinking there is Bitcoin is in the pole position. It followed the commodity theory of money perfectly, where it was the first crypto asset. It was used to exchange into all other crypto assets as they were brought to market. And it is the bloodline of liquidity within crypto. And so this is social defensibility, which is really hard to take away from Bitcoin. The only way I think Bitcoin loses its pole position is actually by a mistake from the community or the core developers. And I think that the two places, or the two potential Achilles heels for Bitcoin, would be around the governance process or around a lack of privacy leading to a lack of fungibility. And so, on the governance front, let's say Bitcoin encounters a catastrophe that the community doesn't know how to deal with without a really clear framework for how decisions will be made and social consensus will be come to, it could be hard for Bitcoin to act quickly. Whereas I have no doubt that Decred would be able to push through to a necessary consensus change to encounter or rise up to a catastrophe in that way. On the privacy and fungibility side, I know Decred did implement transactional privacy between senders, but we really view Zcash as best-in-class privacy with using ZK snarks. And if someone is going to be super privacy conscious, you tend to go with the best-in-class, which obfuscates the senders and the balances. And for us, that is Zcash. That's not to take away from Decred's privacy functionality. I think it's great and it's important. But it's more if, Bitcoin fails due to a lack of privacy and a lack of fungibility, Zcash would be the clearest beneficiary there. So, we have twice the position size in Bitcoin as we do Decred and Zcash individually. But Decred and Zcash are large positions that complement BTC in our portfolio.
So circling back to store of value, Chris, what's your use case for DCR as a premium store of value, and why do you feel it's important to focus on this narrative?
Yeah, so we were talking about this a little bit before the podcast started. I think that starting with why Decred is a good store of value, I like to think of it as Decred has it, HAS. It's a little corny, but it's hyper secure, it's adaptable, and it's sustainable. So it has it. The hyper secure comes from hybrid proof of work, proof of stake. The adaptable comes both from the process for consensus changes, but then also how conversations are held and recorded for posterity on Politeia. And then the sustainable is the network treasury. So, those components make it a very stable, reliable, secure system, I think, for decades to come. And so that's the bedrock, let's call it, of being a store of value. And Jake, on a podcast with Ryan Selkis, said that, he thinks of the path to being a money as a cascade. And I agree with that, where you're cascading from store of value to means of exchange to unit of account. Now, I think it's really important to not just stop at the store of value stage, right? And this is where having uses for that store of value is really important. I see the argument a lot of, just holding the asset is an application in and of itself. But people hold that asset to preserve purchasing power with the ultimate thought that they will use some of that purchasing power for other services or other assets or other utilities. And so this is where I'd like to see, Decred be built in as a form of collateral, potentially in Ethereum, into Ethereum's DeFi ecosystem. DeFi is always looking for diversified forms of collateral. I really think if something's going to start off with the store of value rallying cry, using it as a form of collateral is the clearest immediate use for that, because you can issue yourself credit from that collateral. This ties into Decred's genesis in its name, right? Decentralized credits. And so working on collateral integrations, I think, is key. I also think that DCR DEX could be sneakily important here. So if we look at how Bitcoin, became the reserve asset, became the core money of crypto, I mentioned earlier that it followed the commodity theory of money. And the commodity theory of money speaks to how, there are hundreds, thousands of commodities in our world, but the ones that become the monies that develop this financial premium are the ones that are most often used to exchange between all the other commodities. And so Bitcoin followed that to a T. Now, if DCR DEX becomes a core piece of infrastructure for crypto where, it's facilitating not just transfers from Decred to BTC or ETH or Zeke or DOTS or whatever it might be, but actually facilitating the transaction from ETH to BTC with DCR as the atomic swap intermediary, then I think Decred actually could become another bloodline of liquidity to date, or say a bloodline of exchange, because that it's TBD how liquid DCR DEX becomes. But if it is a core, if DCR becomes a core mechanism by which value flows between other crypto assets, that's an entrenched position that is really hard to remove. And especially if that infrastructure is decentralized, non-rent seeking, privacy preserving, it's hard to beat. And that infrastructure is, of course, built on the underlying economics and machinery of Decred and DCR itself. So that's another area around which I think Decred could further cement itself as a store of value. The last one is potentially around extending Politeia. for other networks. Politeia is a really beautiful system. It's kind of like what Reddit should be in terms of it's immutable. The conversations are there. You can get censored. You can get removed from the board, but then you actually have proof of censorship, which is really important. So all the information is there to iterate through proposals. And Placeholder works with a number of crypto networks. All crypto networks face these problems, and Decred has built a really great piece of infrastructure for it. And so I would love to see Politeia extended and see other people using their own instances of Politeia, and preferably anchoring into Decred's blockchain, into that immutability, and helping to amortize the proof of work, proof of stake costs. People argue, it wouldn't require that much DCR. It's not so much about the flow of DCR in this case. I think it's actually about Politeia and anchoring into the immutability of Decred's blockchain, actually coming to be conceived as a fundamental piece of infrastructure. And if that's the case, people will come to hold DCR to support that infrastructure, but also hold an interest in it. We hold the things that we use. And so, any number of cases, but there I outlined DCR being used as a form of collateral, DCR DEX helping it follow the commodity theory of money in a different way than Bitcoin did, but similar and really important, or extending Politeia into the broader crypto space and even beyond. Hopefully someday governments or municipalities use their own instance of Politeia for public discourse and proposal iteration.
Chris, what are your thoughts on the market only giving big market caps to assets perceived to be one of the few handful monetary stores of value?
So I don't think this one is actually true, in that people often mix up individual assets versus asset classes. And so, for example, equities, by and large, are much more investable asset class than currencies. Now, U.S. monetary base, at least before the Corona crisis, was around 4 trillion. So it was one of the U.S. dollar was one of the biggest individual assets, or similarly, take gold. Gold, one of the biggest individual assets at 7 trillion. But gold or precious metals as an asset class as a whole are actually much smaller than equities. Now, there are many more equities. So what I'm getting at here is you will have, and this falls a bit into my classification of crypto assets, where you have capital assets, which produce value flows of some kind, and all of the pure staking assets are capital assets and will be valued as the net present value of their value flows, versus the consumable transformables, which are more traditional commodities, versus the store value assets, which often overlaps with the consumable transformables, but has this financial premium. So what I'm getting at here is, we have many examples of equities that are in this $1 trillion market cap range. And I think that you could have some non-store value crypto assets that are providing a global utility, and doing so using a network model, so not using a company model, but it could be stake-based, and that could accrue tens or hundreds of billions of dollars in network value because of the scale that system gets. I think MakerDAO's MKR is a good example here. So to wrap up, and I'm happy for you to push back if you'd like. I do think that the biggest crypto assets will be the ones that become crypto monies, or starting with being a store of value. But that's not to say that other crypto assets that provide services like the credit facility and stablecoin that MakerDAO provides won't grow to be massive networks with large network values themselves.
So you see them taking some of the, I would say, of the top SOVs market share.
It's not that they'll take from SOV's market share. It's that they'll take from equities market share. So it's kind of like the SOVs are going after gold, or if they want to be monies, going after the US dollar, whereas something like MakerDAO is going after Lending Club. And so this is actually where I get really frustrated in crypto, because a bunch of communities think they're in competition when they're not, and it just wastes a lot of energy. The way I think of, and I'm just going to keep using MakerDAO as an example because it's one of the ones that people tend to know most about. MakerDAO and protocols at large that provide these more abstract services, they are minimally extractive, whereas equity-based companies are maximally extractive. And I think that given the social environment right now, people are fed up with finance, fed up with maximal extraction that accrues to the benefit of a small group of shareholders, and people are ideologically becoming much more aligned with being minimally extractive and spreading the value creation as far as possible. And so this is where I think that equities have been an incredible tool to capitalize long-term ventures over the last 400 years. But as the returns to technology-based systems have grown, equities do not spread the value wide enough, nor do they spread the governance wide enough. And so I think they're quickly becoming an outdated model. And crypto assets outside of the ones pursuing a store of value, and they tend to be, the purely stake-based crypto assets, that's their opportunity, right? And so let's let those assets pursue those opportunities. And the ideals that those crypto assets have and what they're applying to equities is actually quite similar to the ideals that the Decred community has and what it's applying to the store of value. They're just focused on totally different problems.
Understood. So some believe that the winning SOV coin will be winner take all. Say like a BTC will, take up most of the market share, not leaving room for others. I believe it's going to be winner take most. What are your thoughts on that? And how do you see these other projects that you've mentioned taking market share from BTC and playing an important role within the ecosystem?
I agree with you that it's a winner takes most. Most of my career, or actually all of my financial career, has been in the institutional space. And institutions diversify. They rarely hold one of something, right? And so if you're going to have a digital store of value bucket, I think you hold at least a handful of names. And I outlined, our thesis between Bitcoin, Decred, and Zcash, and plan to put out some writing to that end. But, when you're diversifying, you hold assets that have different forms of risk, and that hedge against the other assets' riskiest features. And this is, again, where I think Bitcoin, Decred, and Zcash fit well together. It probably follows the 80-20 rule, but 20% of, say, we have gold at, $7 trillion total value. So 20% of that is north of 2 trillion. And, if that were to go to Decred and Zcash, there would, of course, be material returns to both of those assets from here.
So now that you mentioned Zcash, what's your view on the importance of monetary fungibility and privacy? And why are people taking it lightly? And I guess your thoughts with DCR's privacy implementation align with Zcash, since DCR does have the ability to evolve, and we've seen some trouble that Zcash has gone through recently. What are your thoughts on all that?
So starting with privacy and fungibility. Well, actually, let's start with fungibility. If any asset wants to be a money, it has to preserve its fungibility. And something that actually scared me, even going back to 2015 in my work at ARK Invest, we were exploring an ETF at the time, and a Bitcoin ETF. And one of the things that one of our infrastructure providers asked us for is if the ETF could only hold newly minted Bitcoin. So there's lots of AML, anti-money laundering, and KYC, know your customer concerns within the traditional financial services space. And so some of our infrastructure providers and regulators wanted to know that the Bitcoin that would be held by the ETF could be provably clean. And if you have that develop, I anticipate and fear that you could have two markets for BTC, provably clean BTC and basically gray or questionable BTC, or potentially three markets, provably clean, gray, and then clearly black. And that would hurt BTC in the long run. So a way to protect against that is privacy, where you're obfuscating the trail of transactions that any asset has. And so the two are intertwined. Now, between Decred and Zcash, I work with both teams closely. I have a lot of respect and admiration for both teams, and I actually think there's a fair amount of respect between the two teams. With Decred implementing privacy, it comes a little bit closer into Zcash's territory, but Zcash is really pushing the bleeding edge on using zero knowledge proofs, not just for privacy longer run. And this is where I think that Zcash's governance actually sets it up to be more familiar to a lot of institutions and governments. And so Zcash could be widely used as a public chain, but that is private for institutional or governmental purposes, where Zcash can still provide this viewing key. So two parties can transact privately, but they could provide a viewing key to a regulator. And that could actually be a really key component of practically using Zcash for an institution. I think of Decred as a very new age cybernetic collective that doesn't have a lot of desire to integrate into the existing world. And that's a big difference, I think, from Zcash. And so Decred has good transactional privacy. I don't believe it's account balance privacy yet. Zcash has both. And again, they're on different paths. Like Zcash's entire focus is around privacy, and they have some of the best engineers in the world, engineers and scientists and researchers focusing on that. And Decred will be able to benefit from some of that, but I don't think Decred's intent is to be best-in-class privacy.
Agreed. Circling back to the whole macro situation and institutional investors playing a role, what do you feel? I would say, I know you don't like to speak for others, but what do you feel institutional investors want to see in the space if the problem persists and the recession or the depression comes around?
Well, I think, to be honest, institutional investors are too busy with their other portfolios to really be paying much attention to crypto right now. Even if you take ARK Invest, one of the most forward-thinking institutional investors around the crypto space. When I was there and when we became the first public fund manager to provide our clients Bitcoin exposure, Bitcoin was still, less than 10%, less than 5%, sometimes less than 1% of the overall portfolio. I don't know ARK's current breakdown between equities and crypto assets, but I'm willing to bet, it's less than 5% crypto assets in that portfolio. And that's one of the most aggressive examples, right? So if you take the average institutional investor, they've got 99.5, 99.9% exposure to quote unquote traditional assets. Even if they do have crypto exposure, they're so consumed by what's going on in the rest of the world that they're not really paying attention to us. And so these things just take longer than we expect. And so 2017 was a very frenzied period. Everyone got overly optimistic and ahead of themselves. And we're having to do more work here. And we'll have to pull ourselves up by our bootstraps. I expect coming out of the Bitcoin halving for there to be a material economic impact. So I think of halvings a bit differently, I think, than what I see most people discussing, because people are always debating, well, why doesn't it get priced in? This isn't an efficient market. I actually think that the way the halving influences Bitcoin is actually through the miner economics and the way that the miners dictate order books. So if you think about all else held equal, and also acknowledging that 95% plus of miner revenues come through the inflation of BTC, not transaction fees. If you hold all else equal, if you have the amount of BTC that miners are getting, you have to double the price of BTC in order to hold revenues, right? Another way of putting this is a halving means the marginal cost of production really doubles because you went from producing 12.5 BTC to 6.25 BTC, but you're using the same capex and opex. Now we are seeing a decrease in the costs to mine BTC as we have these difficulty adjustments. But what I'm getting at here is if you think about the first halving for Bitcoin, the miners were the biggest holders of Bitcoin. And so if they went from, putting their market orders at, let's see, the first halving was November 2012. So I think we were like sub 30 or something. But even if you just went from placing those orders at 30 to 60, then you shift the ask side of order books up. You basically double that. And same applied to the second halving. Now, in the third halving, miners have a smaller percentage of BTC because so much BTC has been minted. And so their impact here could be less material than it was for the first and second halving. But they are still, one of the largest players in this network, in this marketplace. And taking into account that their marginal cost of production doubles with a halving, and that the price floor for commodities tends to be their marginal cost of production, I think that will accrue to Bitcoin's benefit. And so we could see a push upwards post halving. It's typically, if we go back in time, November 2012 was Bitcoin's first halving. In 2013, Bitcoin went about 60x, 60. July 16 was the second halving. In 2017, Bitcoin went about 20x. So, it's not an immediate impact. People want it to be an immediate impact, but it's more a follow-on. If we get this follow-on rise, and let's say by the end of 2020, even if Bitcoin's up for its market participants a measly, 20, 30, 40% from the start of the year, that will look really good to other asset managers. And so let's say you're getting to the end of the year. Hopefully Corona doesn't have, a second wave in the fall. If it does, then everything I'm about to say goes out the window. But if the world is, recovering, if people are developing greater appetite for risk, and BTC has, clearly outperformed in 2020, then you could see a big push into BTC following that. But again, there's so many variables here, especially with COVID being at the stage it's currently at.
What are some of the things you're seeing being worked on as custody solutions for institutional investors to come into the space to help them feel secure?
I've had conversations with all the big custody providers, BitGo, Coinbase, Anchorage, around working on Decred integration. They're all interested. They all recognize the quality of Decred's project. For them, with BitGo in particular, Bitcoin services a lot of the exchanges, and because Decred's liquidity isn't great, they're driven more by exchanges than funds, I believe, because I haven't been able to get much movement from them. So this is where if Decred becomes more liquid, more exchanges want to support it because more of their customers are demanding it, then that could get BitGo to move. With Coinbase, given how they've supported Tezos, and I think staking is going to become a material part of custody providers, Decred is one of the most quality staking projects out there, and so I think you could see Coinbase supporting Decred custody first, and then later rolling it into their custody practice, their staking practice, Anchorage, similar story. What goes on for all of these custodians is there's opportunity costs, right? So it's super easy for them to integrate ERC20s, but layer one chains like Decred are tougher for them. And so the benefits have to outweigh the opportunity costs. And there's a lot of people, willing to pay money or jump the line in certain ways. And Decred has never really played that ball game. I'm confident that we will get custody support over time. It's just, a slow and steady game.
What do you feel DCR could do to become more attractive to IIs?
Well, custody is definitely one. They do not want to self-custody, and many of them cannot self-custody their assets due to regulation that came out from 08, 09. So that's a key one. Liquidity is the other. And I've done a lot of work with Jay-Z and other community members over the years to improve Decred's liquidity, and it has improved, not as much as we'd like. There's different forms of liquidity, and our focus to date has been on the spot exchanges. But from the institutional investor perspective, a lot of activity went from OTC desks to actually a lot of the derivatives and futures exchanges. And Decred, it's in the privacy coin index on FTX, but Decred doesn't show up a lot in the derivatives markets. And given the capital efficiency of those markets, they're really attractive to institutional investors. And so I think another potential strategy for Decred is working on its derivative support. Anything that wants to be a global store of value needs to have a really rich market of options. Well, I don't mean options in the derivative sense, but just options with how you access that asset. And Decred doesn't have the full suite yet. It definitely needs to build out that full suite, improve spot market liquidity, improve custody. And then, at that point, it really just becomes an investment committee decision. So, institutional investors, it's a multi-step process for how they invest in something. There's first getting through the investment committee, which you can think of as checking off the thesis, that the thesis is sound. But then you have to go through operational due diligence. And that's, the nuts and bolts of how you custody this thing, how you account for it. What do you do if you're staking, and how do you pay your taxes? And so streamlining the operational due diligence part for institutional investors is kind of a hidden but really important component of getting them on board.
Understood. What are your long-term concerns for the project?
Well, we wrote in our initial thesis for Decred that with good governance, you can have any feature you want. And I think that is very much playing out for Decred. Decred is one of the fastest moving, most innovative stores of values out there. And so that is fantastic. Now, any tool cuts both ways. And the potential downside of being able to have any feature you want is you end up having too many features, but no cohesion between those features. And this is where, I would really love to see a doubling down on some of the core value propositions of Decred. Integrating into as many collateral systems as possible, the Nexos, the Celsiuses, as much as Ethereum's DeFi as you can. There's going to be other DeFi ecosystems on other smart contract platforms, being early to integrate with those. Decred can respond really quickly to these things if it sets a strategic vision of, let's nail the collateral use case. The same goes for DCR decks. And DCR decks could actually be a core component of allowing that collateral ecosystem to flourish. And then Politeia, what I was talking about earlier with extending Politeia, that's separate entirely, and we could just leave that one aside. Like, if that's not attractive to the community, leave it aside and just really focus on, the collateral ecosystem and DCR decks and educating people on that opportunity and the utility that Decred provides there. It's just, I guess if I were to distill it down, it would be potential lack of focus because the system enables so much.
Well, Chris, I appreciate you coming on the show. Do you have any closing thoughts and message to newcomers or potential stakeholders?
Well, first, thank you for having me on. I think, in closing, Decred is this fascinating new cybernetic collective, and it is composed of the decisions and intentions of all of its community members, and it provides a real opportunity to earn your wages in a crypto asset, and then hopefully spend those wages into an economy, which is a good way to become a money. And so a lot of projects out there don't provide as clear a way to earn your wages in a crypto asset and support a network as an individual or just an online contributor. And so if that excites you, Decred always needs help on the engineering front. I think particularly on the product front, we've talked about integrating it into different collateral ecosystems, and I think that there's a lot of opportunity there, or spreading the word around DCR decks. Absolutely get involved. I think that this period has been painful for everyone in crypto, and maybe particularly painful for DCR holders as the asset hovers in the $11 range. Has probably fallen further than most people expected it to. But this is really, in the depths of a downturn and a bear market is where the strong communities really rise to the surface. As I was saying with Bitcoin earlier and Bitcoin's network fundamentals, and that regardless of what the network or regardless of what the market does, the network will persist. I think the same goes for Decred, right? This system has been built to last for decades, if not centuries. Joel, my partner at Placeholder, wrote about it as being the most sovereign crypto network out there, and not reliant on really any meat space components other than really the contributors and the hardware, but not reliant on the traditional world. And so that means Decred is operating in a green field, which is the most exciting type of field to be in, other than maybe the ocean. But I guess I just consider that a field. So, get involved, hold the faith. We're going to make it through this, and I'm excited for the years to come for Decred.